If you've been trading support and resistance but they keep failing on you, chances are you still don't know about the flip zone. In this video, I'll show you how I draw my support and resistance zone with the real example. Therefore, you will be able to catch the best trading opportunities and make money in the market. So when you're looking to draw support and resistance flip zone, firstly you should be on a higher time frame. This is important to understand how to draw support and resistance because we can understand the technicals on the higher time frames, which will help us intra-trade the stock. Now we are on the Nifty daily time frame, and to quickly go over the basics, the whole idea with support and resistance is you have resistance at the top and support at the bottom. When market comes to the support level, it usually bounces back higher and resistance usually push the market lower. So how do you draw a flip zone which is different from usual support and resistance? I will be looking for 2 to 3 touches of the support and resistance. As you can see, this is a flip zone here. And you may ask, what makes this high profitable zone? 1 touch as support, again 2 touch as support here, third support here. We broke below the support but got right back up. 1 more touch here and 1 more touch as resistance, another touch as resistance, and 1 final touch as resistance. As you can see, 1, 2, 3, 4, 5, 6, 7, total 7 touches on this flip zone. Because there is multiple touches to these zones, therefore it becomes a valid area of interest for us. As you can see, whenever we are above this zone, we are going up. Once again we go up from here. When we are under, we are going down. We are going down again here, and we go down again, and for the one last time the market pushes down again. Therefore you can see how this zone is acting as previous resistance turn into support and previous support now turn into resistance. Now one big mistake I see lot of people making, and I made this mistake in starting as well, is drawing too many trend lines on the chart. So what I mean by that is drawing levels at each and every single move. This low and this high, this low, this low. This will clearly affect your decisions in the market because you will have more lines on the chart. So if you draw too many levels like this, you will get a thought, where should I buy, where should I sell, do I need to sell or do I need to hold, what do I do? This will clearly affect your decisions in the market, and that is going to give you what is called as analysis paralysis. Therefore, huge thing that improved my trading is taking away all these little support and resistance levels and focusing only on the extremes and high profitable ones in the market. It's so easy to get locked on a thought which says you want to trade more right now, but that's a lie, guys. I don't know why our brains play these tricks on us sometimes. The truth is taking less trade is way more efficient because you are focusing on a high profitable trades instead of getting caught in the sideways action. Now how do we take a trade using this flip zone? Now what I see is this previous resistance pushed the market down till here, and buyers are starting to step in very strongly from this 1, 2, 3, 4, 5. There is totally 5 touches of strong support here. So this is the valid area of interest we will also use, and starting a strong uptrend from here. Basic idea of uptrend is just the continuation of higher highs and higher lows, highs and lows, highs and lows. Now we'll go to even more lower time frame to see what is happening. On 1 hour time frames, what do we see? It's same as daily, but we have more data available for us here. We see that resistance which held below this zone, and we are holding this resistance very strongly, and uptrend making highs and lows, higher high, higher low, higher high, higher low. And you can also see how strong the buyers are from this zone. Price is also gapping up for the upside. When there is a gap ups, the buyers are pushing the market higher strongly. Now what we are waiting for is this previous resistance where sellers were sitting heavily to turn into support, because when we break above this zone, we take out all the sellers sitting here from the market. Let's play the tape and see what happens. You can see how strong the buyers are here. When we break above, we are getting a big push above that resistance, taking out all the sellers from the market. Now where do we enter a trade as we are above this zone? For that you have to know the system we are using, which is called break and retest. Basic idea of break and retest is we are waiting for the market to break above a key level, then come back and retest your key level for continuation towards the upside. That's how break and retest system works. In this video I'll explain what is a break and retest clearly. You can go watch it after this video. I link it down below. So we are waiting for a clear pullback to this zone. Look at this 1 hour candle that formed on this zone. From the pullback, we got a very strong pin bar candle. That's a bullish candle. Now let's go down to even lower time frames. Now here we are on the 5-minute time frames, and this is the pullback we got from the 1 hour time frame. Now you have to remember every stock needs a pullback before the next move happens. Don't be afraid of this pullback. This is very healthy and you need this for an uptrend. Now here what would I draw on this 5 minute? I would draw this downtrend line. As we can see here, there is a mini downtrend pushing price below, which is good because now we can get our retest on this flip zone. Now we can go to the 1 minute time frames where we can look for an entry. On 1 minute, what am I looking for? I am looking for this downtrend break which we draw on 5 minutes, and we break this trend line also. You can see the buyers are starting to step in here. So now for entries, we mark out the last lower high which the market put in. So you can see lower low, lower highs, lower low, lower high, lower low, lower high. This was the last lower high. Now we are waiting for the break of structure for the confirmation. So we will mark this level. Now we are waiting for price to break this level, come back and retest this level with strong price action candle. You can see market broke this level, came back, and now it is retesting this level. Now we simply wait for a bullish candle to form on this level so we can enter the trade. Here we see the buyer stepping in, putting in a strong bullish candle. So seeing this candle, we can enter into a trade, and our stop loss, which is our invalidation level, is going to be where this candle which broke the higher low. So here is our stop loss. So that's our invalidation level. So that's where we accept we are wrong and come out of the trade. And the profit target will be a 2 hour, and final take profit will be this high. I don't think market is going to push till here. So we will be marking this support level which turned into resistance here. Let's play the trade and see what exactly happens. As you can see, there was one more retest here. You could have added to your positions one more time here. There we go. However, this trade took a while to play out. Therefore, you could have booked 50% or taken partials as we go up and letting the remaining run to your final TP. So your psychology doesn't get affected too much. Now let's see the real example I took using this exact flip zone, and here is the real time execution of the trade. Everybody can talk on a replay mode, but you have to be able to trade your plan as well. So right here we can see we are on Reliance and we are using 15-minute time frames to mark out the zone. 15 minutes is also higher time frame level. You can experiment on 15 minutes, 1 hour and daily time frame. See which time frame suits you personally. Therefore, if you have a job and you can't be on the charts all the time, you can use the daily time frames. Or if you're day trading like me, you can use 15 minutes and the 1 hour to draw your zones. I personally like using 15 minutes and 1 hour because you will find trading opportunities more often. So on Reliance, we can see a support level being made at 1390s and 30s. You can mark this out as zone. The reason this is a strong support level is we can see the stock is making a big move towards the downside. After the move, it kept coming back 1 time, 2 times, 3, 4, 5, almost 6 times. So if we break under this strong support, we can use this area of interest for trading opportunities. So next time when we come back to this zone, it started consolidating sideways, and right here what do we see? Finally price is breaking below strongly. Now the sellers are overpowering the buyers, turning this previous support into resistance now. How do we enter a trade? After knowing this information, what I am going to do is identify my first candle of the day and mark out the high and low. This can be done on 15 minutes or 5 minute time frame. So depending on what time frames you are on, you can mark out the opening range on the 15 minutes or 5 minute time frame. And this is done on the first candle of Indian market open, which is at 9:15 AM. I have a whole separate video on this setup. It is called the first logical candle. So we are using that setup for our entries here. On this day, the 15 minute and the 5 minute low formed in the same candle. What I meant by this is, you can see the 5 minute low is also here and the 15 minute low is also on the same level, giving us a high probability trade to enter. So now we go to the 1 minute time frames for our entries. As I said earlier, my main system is break and retest. Therefore, we wait for the price to break below this 15 minutes low, come back and retest. Let's play the trade and see what happens. I also notice market is putting lower low and lower highs. Lower low, lower high. Lower low, lower high. Same here, lower low and lower high. You can see this low is lower than this low, and this high is also lower than this high. So you can see market is shifted to a clear downtrend. So market structure is still intact. Let's keep on playing the tape. Right here we are retesting this key level. Now what do we see is we broke this previous support and now we are coming back up for retest, tapping into our previous support perfectly, and this support is now turning into resistance. And to confirm that move towards the downside, we are making a very weak inverted hammer candle here. What this candle shows us is buyers tried to get above the support level. However, the sellers are not allowing that to happen, and sellers come back right at this level, which is this wick right here, pushing the stock down and making the stock close below this previous support, giving us this inverted hammer candle. Therefore, seeing this price action, we can enter into a short positions right here, and our stop loss will be just above this candle which broke our key level. Due to the fact if market breaks back into this support, it's likely going to be in the range and we don't want to be in this range, and our take profit will be 1:2 risk to reward, and final take profit is this previous low. So let's play out the trade. As you can see, price comes back, but the sellers are very active now, pushing price down very strongly. You can see price ended up tapping once more, so that is where I started adding to my positions once again. You can see how price is respecting our key level fairly nicely, and you can see right there, it took a little bit of a while, but you can see the trade ended up working out very nicely, giving us almost 1:6 risk to reward. Hope you guys learned something new from this video. If you did, appreciate if you drop me a like and a sub. Peace.